Hello and good morning to you. My name is James Boyd. We welcome you to Growth and Value Stocks. Alongside me, my good friend Connie Hill is in the chat. You know Connie, and we welcome her. Say hello to Connie. We also welcome all of you here today. Now, this is not a one-off session. This is a class, a webcast that we do each week at this time. It's live and we post it, and I'll share with you that link where you can find it in just a moment. But just real quick, Lena, hello to you. Grace, welcome. Paul, Jay Richardson, WW or Will, Ricebird, we welcome you. We got Five Iron Bill here. Ask Bill what that means. And Kevin and JP among us. Good morning. Now, the nice thing about actually having a class like this, we can kind of all meet together and kind of talk about some of the things we're seeing in the market. Just real quick, also a reminder, if you have questions, go ahead and ask those questions in the chat. I'll be monitoring the chat, and also so will Connie as well. You'll see her initials as CH. Now, remember, as we get started, some quick things that I just want to make sure you're aware of, okay? So number one is, where do you post these classes? Well, if you go to, so one place you can find them, if you went to YouTube, you could go to right to this page, and you're going to see that on this page, you will notice, you could go to youtube.com, type in Trader Talk Schwab Coaching Webcast, and it will come to this page. This is our channel on YouTube. Now, as you subscribe to that channel, which you'll see subscribe probably in the dead center of the page, once you go to that link that I sent you, you could subscribe for free. You could search any of our content by just clicking on that search icon, and also see our content that we have as well. So check it out. Also, second thing I just want to make sure of, if you said, well, James, can I get a flavor of some of the things that you've taught in the last 2-3 weeks? Sure. Example given. So on the right-hand side, I just sent you this playlist. You can bookmark it, and you're going to notice that right over here on the right-hand side, just like if your favorite TV show, right? These are the episodes chronologically ordered of things that we talked about. Last week, we talked about bearish traders turning bullish again, question mark. Investing principles and practices over emotion. My gosh, okay? So these are some examples. So you could click on those and it's going to start playing the last class, okay? You could select any of those, okay? So just want to make sure you're aware of that. Also notice that Connie, she is on X. I'll post that right there in the chat. And we do post educational content there. And there's Connie's page, and you'll see that I have a page as well, and all of us coaches do. You can follow us right on X, okay? Now, I'll show you just real quick some resources on Schwab as we go, but I just want to make sure I let you know and set the table of some resources that you have available to you, okay, and some quick wins. Now, just real quick as we get started here today, remember the information I talk about is provided for general informational purposes only. Schwab does not recommend the use of technical analysis as a sole means of research. This class talks about fundamental analysis, but one of our favorite discussions, along with technicals and fundamentals, is intermarket analysis. The intermarket analysis is looking at correlations of certain things, and we've talked about that quite a bit. And so don't think that technical analysis is the end. It's the starting point. Welcome to the journey. Strap in. Now, just real quick, remember that when we talk about our examples, we will use the Paper Money software application. When we talk about investing involves risk, including loss of principal. And our examples here today, we're going to kind of focus on really those growth areas. We'll also talk about some areas that are not growing. Okay, now, what an interesting day to talk about growth. Right? Boy, what an interesting night it's been. Okay, now as we do that, we'll talk about looking at for investing criteria. We'll use the schwab.com website, and we're going to look at examples. The best way to learn is to do examples. Now, as we go through this, do not feel shy in asking questions. So one of the first things I want to kind of show, so this one I'm showing you here, we are on the Thinkorswim platform, which you can download right on schwab.com. Now, you could actually, by the way, let me just show you that to you right here. If you went back to this, let me grab that. If you went back to that page, there it is. So if you said, where can I actually get this, okay? Right at the very top. So if I'm on schwab.com, right at the very top, you're going to click on that first tab, Okay. So if I went to schwab.com, click on the first tab, you're going to see where it says Thinkorswim Trading Platforms. There is where you can download this platform that I was showing. So if you say, I don't have that, go to schwab.com, click on that first tab, click on what I have my finger on right there. Now, the 4 charts that we've been watching religiously, if you want to say that, is what are those 4 charts we've been talking about? Well, number 1 is oil, okay? We're going to use the proxy of Ford/CL. I'm not going to say a whole lot about that. I think the red candle kind of shows you what we've been talking about. We'll show more of that momentarily. We talked about how yesterday I said the word unsustainable a number of times, and there it is, okay? And by the way, seeing that drop a little bit, we'll just use the word a little bit, helpful, and we'll show why it's helpful. Now, second chart that we've really been talking about is volatility. Now remember, the volatility in the market, we use the ticker symbol VIX. Think of this as if we are all on the beach and we are looking out the ocean, looking at the waves, and the higher the VIX is, the higher the waves. Well, just like if you're at the beach, the higher the waves, less people want to probably get in the water, right? Risky. Now, seeing us a couple days ago sitting here above 30, and now we even touched 20 today here. Now, for some people, that high VIX is their opportunity, okay? They're trying to get in. They're trying to do those things we talked about, dollar cost averaging. So that seeing a drop down is helpful. Now, remember, if this chart is down, what is probably up? Well, what's probably up is the market, right? As we'll show in just a second. Now, the other one that we're actually going to kind of mention is the US dollar, right? That US dollar is actually impactful. There's reasons for that. We actually had a drop there today. If the US dollar actually drops, what might go up? Can anyone actually tell me? Now remember, I want you to be a master correlation. This comes into investing ideas when you see these charts. We're just not pulling up the dollar by itself. It's if we see this going down, what are the relationships of what might be going up? Now, the 4th chart that we've been talking about religiously is also looking at the interest rate using the 10-year maturity as a proxy. Well, this is going down. What relationships could actually happen if this chart is actually going down? If this chart is going down, there's probably more of a refocus on growth stocks. So when we talk about growth, what on earth are you talking about? Well, so first off, if we said growth, looking at, let's say, the Russell 2000 would be like, I mean, these are small caps, okay? These are not Home Depots. These are not JP Morgans and so on. If you look at, let's say, the Russell 2000, this is growth, okay? If you also look, which broke out, if we also look at, let's say, the NASDAQ, that is more of a growth area. 50% of that is technology stocks. Speaking of technology, you're actually seeing the IXT, the technology sector, pretty big push back to the upside. And do not forget about, am I missing anything? Can you tell me what I'm missing? I'll tell you what we're missing. We're missing the S, O. Can you buy a vowel? Yes, buy the vowel of the O, socks. And what did you see on the socks here today? Say the word hallelujah, okay? Now, so when we talk about growth, we're talking about an index, a sector, an industry group that is growing faster than the economy in general. It could also be, let's say, stocks that are actually growing faster than their peers, okay? Now, if we take a look at this, so kind of some of the major takeaways so far is small caps broke out of that basing pattern. Let's go back and show that just a sec. When we say basing pattern, what do you mean? Well, it had a defined level of resistance and it broke up through that. You also saw the mid caps break out to the upside. I'm not sure if you looked at those, but some of us like to look at those as well. You also, when we talked about the relationships of US dollar going down, we did see gold start to get a little reversal here today, among some other things. Now, the one thing I want to kind of say is when we talk about other things that were quite helpful, we saw industrials get a pretty big push here today. That also kind of is showing some basing pattern reversal, okay? When we say industrials, what other space would we say in terms of sectors? Industrials and what? Transports, right? So we know with transports, we're using dollar sign DJT as an example. And, that actually hit a brand new high here today. Now, many investors would say, I'll take that. Okay. Now, speaking of that, we'll come to airlines in just a moment, but I do want to make mention of financials. Okay. When you look at, let's say, financials, those have actually been showing a little reversal as well. Helpful. When we talk about interest rates, we would bring up dollar sign IXRE. Okay. In terms of that. And by the way, when you say rates down, real estate up, we would also say home builders as well. Home builders is not just homes itself, right? It might be the retail stores that support the home building, right? That could bounce back as well. So a lot of things kind of going on. If we actually take a look at, let's say, energy, I think that was a perfect telltale sign of the breakdown in the oil price and the energy sector. We'll just leave it at that. We're grateful that we sold out of those two energy stocks, Halliburton and Devon, on Tuesday, because those stocks got pressed down and those were sold on Tuesday. Pretty big drop here today. Now, what benefited was, and let's look at our examples now, okay? So this morning, we talked about the last two, maybe 10 days or so, about airlines. And the two airlines that we talked about was, and by the way, the theme was that oil could drop and the airlines could benefit. Oil could drop, and let's say some of the discretionary hotels like Marriott and Hilton, etc., might benefit. The thing that we need to bring up with this example, let's go to the paper money account now, okay? And if we look at the paper money account now, something that happened just this morning was we had a target on Delta. You're going to see that right on the monitor tab, okay? You're going to see where on this morning, 1 minute into the market. Now that's my time, Salt Lake City time, okay? So yeah, it was 9:31 Eastern. 1 minute into the market, we see that Delta stock sold at 73.15. Where is 73.15? 73.15 it was right there. So where it opened, it didn't really go up much more. That was the target. Why there? Because we were trying to actually go for that prior high. So that hit the target at 73.15, and you're going to see that some investors took profits. Now, that was actually held over earnings, and you'll see the earnings actually came out here today. So that's one that actually hit. Now, that actually hit out in the IRA, okay? But also, if we go to that margin, you're going to see that it was also in that as well, and you'll see that right there. Now, the other one that is still there, which we'll kind of make mention of just quickly, is UAL, okay? UAL kind of showing those reversal signals as well, getting above, kind of following the lead, if you will, a little bit on Delta, and that had a pretty decent pop. I mean, that was a $10 move, okay, on United Airlines. I don't know. I mean, what's good for some people, right? Pretty decent move, though, okay? Now, I just want to kind of show you that as far as one that did hit out this morning. Now, what I want to do is I also want to kind of look at a couple other stocks, okay? Now, what I'm going to do is one of the areas that I also want to kind of show is I want to go back to just real quick, if you don't mind, the semiconductors. When you think of semiconductors, you're thinking of this is probably going to be growing faster than Walmart and so on. And we don't need to expound upon that. But if we take a look at, let's say this is the group. This is an industry group underneath the umbrella of the technology sector. Now, if we said semiconductors, for some of you that are not maybe as aware yet, we're going to go to MarketWatch. We're going to go to Visualize, okay? Now, this area I think is underutilized. So this is like a visual way to search. We're going to go to MarketWatch, Visualize, and what I'm going to do is just on the left-hand side, I'm just going to bring up just real quick, let's start with the S&P 500. If I click on the S&P 500, we're going to go down to information technology. If we bring up information technology, the sector, you're now going to see in these little white blocks here, these are the industry groups in the technology sector. The squares, the companies. The bigger the square, the bigger the market cap. Stocks like NVIDIA, big market caps. $4 trillion market cap on NVIDIA. But stocks, for example, like Avgo, MU, Micron, okay, which had a 5 PE yesterday, 5, okay, and AMD, among others. Now, I want to kind of start here. There are some stocks here like LRCX, AMT, CLAC. Now, a lot of people say I sometimes struggle with making a watch list. You should not struggle with making a watch list because this is a given list for you. If I was brand new, I would be saying, I'm going to use these as an initial list. Could I add to it? Sure. But these are the ones that are actually have met the criteria to be on the index and are probably more liquid, okay, in terms of stocks and maybe a derivative, maybe. Now, this class is more stock-based, so we're going to focus on stocks. Now, what I like to do is I like to kind of take just a quick peek at MU just for a moment, and then we're going to look at our first example. Now, when you look at Micron, one of the themes that we talked about last week that I post on X is stocks that recently have broken support and have then quickly snapped back up above where that breakdown was. So we can see on the chart that 370 was the line of support, the floor. And it went down there for just a couple days. And what you're now going to notice is it really pushed back to the upside. Okay. Now, a couple tools that I want to make sure that we're aware of. Okay. So first off, we can actually, let's go to schwab.com for just a moment. Okay. Now, if I go to schwab.com and let me just log in for just a moment. Okay. A couple things that I want to make sure we're aware of. Now, everyone close their eyes. Okay. So I'm going to let me just log in. Okay. And what I'm going to do is let's kind of pull up some things. What we want to kind of do is see some fundamental data. Now, on the right-hand side, you're going to click on that search icon. We're going to click on that, and I'm just going to type in MU for Micron. Now, when we actually do that, you're now going to see that I'll click on Micron Technology. Yes, that's what we want to see. We want to get a sense of what we're really maybe considering investing in the paper money account. So it tells us we're in semiconductors. Sure, we just talked about that. If I scroll down, we get a chart. Okay. You're also going to notice now, if I scroll down, any news about it recently. Now, if I actually scroll down, do we see some informations on dividends and so on? Now, dividends that are rising kind of maybe also tell us something about maybe the outlook of earnings. Okay. And we see that recently ticked up. If we also clicked on show more, you're going to see where those dividend payments have actually been over time. I'll talk more about that tomorrow. And if I actually scroll back, just go back, we can now see the earnings. Okay. Now, when we talk about growth, clearly you would want to see over time, at least over year comparison, that the earnings is increasing over time. That's actually important. Okay. Because that could influence the stock price. It could also influence the activity on the trading of the stock and so on. So we look at the going forward, this is the upcoming earnings. A lot of times we as investors, we look at historical. But the problem with historical is that's already happened. We want to know what is the upcoming. This gives us an idea of what the forecasted earnings are. These are the estimates. It's not actual, okay? Now, if we scroll down a little bit, we can see what was the estimate, dark blue, and that light blue, which was actual. Okay? So again, the company is going to forecast. The analysts are going to forecast. It doesn't mean that they hit it. But when we actually take a look at this, the company has shown a history of the actual results being higher than estimate. Doesn't always happen like that. But what you're now going to see, if we take a look at that, that was a pretty big beat. Now, the reason why I kind of show you this is when you look at, let's say, now, I want to kind of hit this for just a moment because there was a question on this, okay? And there was some comments on, if we look at this, you're going to see that the forward PE, okay? And I don't want to get like, I mean, I don't think it's too complicated, but if we said the stock price was $100, just for simple math, okay? The stock price was $100. And let's say the historical earnings per share was, let's say, 20. That's the earnings per share over the last year. then we would know that the PE would be 5. Is everyone with me on that? You'd have a 5 PE. Okay? The numerator, the top, the stock price. The EPS, the trailing earnings, 20. You get really a 5 PE. Now, if you look at a growth company, it's not typically usual that you actually see stocks that are actually trading that are growth based with like less than, let's say, a 25 PE. Now, this PE, this is trailing 12 months, hence the word historical. It now is 17. But just in the last couple of days, this PE was even lower than this because the price was lower. Okay? In other words, if we push down the price, it makes the PE lower. Now, what is the forward PE? Well, if we actually said, let's say the price is 100, but the forward PE is 25, then what happens to the forward PE? The forward PE is 4. Why is the forward PE typically lower than the historical or the PE? It's because the forward earnings per share tends to be higher. You get a higher denominator, you get a lower forward PE. So when we take a look at this, if we actually said how many growth stocks actually have a forward PE of 6.61, the answer is not that many. This is why people are looking at it. Does it mean it's going to go up? No. The other thing that we want to kind of keep an eye on, which I'm not going to get into, but people have asked me to kind of just speak just real quickly. When we actually look at the trailing PE, which is at 17 point, let's say 83, okay? We also look at the forward estimate of G for growth. We know that if you put the PE on the top and G for growth in the bottom, this actually gets what investors really call a PEG ratio. And really, the lower the PEG ratio, the more value that actually some investors might deem that it actually has. Now, I'm not going to get into what that forward estimate is, but you probably imagine that it's probably pretty low. And speaking of that, it's probably already on the chart. I just want you to look at that on the bottom there, that PEG ratio. If this was maybe at 1 to 2, many value investors or growth investors might be maybe interested. This is not even 1, it's below 1. It's so unusual. Now, sometimes we think that what investors are doing is completely logical. But we're talking about people here. And what am I saying about people? Sometimes people are not logical. How many of you realize that? Type in the chat if you realize not everyone is as logical as they really think they are. Ha ha, everyone get a laugh. Okay, that's funny. Now, here's what we're going to do. When we take a look at we're talking about growth stocks, you're going to see that the trailing PE, or historical, 17.83. Forward PE is actually looking at the forward estimate of earnings, and it's actually 6.61. Now, that's very difficult to find a growth stock that has these type of numbers, historical and forward, where the multiple of the price over the earnings is that low. Now, we don't know if it's going to go up. We're going to find out. And what I'm going to do is the first trade example here is I'll pull that up. And what I'm going to do is, let me clear that chart. There it goes. Now, what I'm going to do is let's bring this up. Now, a lot of people are going to look at this and say, oh no, it's a red candle. It's horrible. Wait, is it? I mean, if we didn't get in yesterday or the day before, is red candle horrible? Nah, the red candle's not horrible. It's just saying it's getting a little bit closer to support. Now, I know some of you might say, James, show me those moving average envelopes. I'm not going to go there right now because there's other examples I want to get to. But I'm going to right click on the chart, okay? So what I'm going to do is I'm going to right click on the chart in the paper money account, okay, MU. And what I'm going to do is when I right click on the chart, right at the current price, we're going to go down to where it says buy custom, and we're going to go to where it says with OCO bracket. Now, you know exactly what this means. Number one, we're going to try to buy it. Number two, we're going to have a bracket order. Bracket meaning we're going to have a target and a stop. Now, if we did this, what I'm now going to do is go buy custom with OCO bracket. And now what you're going to see is I'm going to close this left sidebar down just by clicking on that little arrow. And now what I'm going to do is example given. I'm going to try to buy, let's say, 25. Well, let's just. I'll even do an example of 20 shares. Okay. Now there's reasons why we're doing 20 shares, but if we tried to buy, let's say, 20 shares of stock, okay, the price that we right clicked on the chart was showing 404.20. We don't have to do that. We can unlock that lock right there, click on it, and that price is going to move around with the current price. Now, if I ask you a question such as, where would you try to sell? Where would you try to sell? If it went up, where would you try to say, I would like to get out? Well, many investors might say, well, James, if it went up to, let's say, blank, fill in the blank, I would like to get out. And as far as the stop, if it went to this price or less, where would you say I would like to get out? Well, as you're filling in kind of the first one, the target, I'm going to change that day to GTC, day to GTC. Well, if we look at this prior high, that prior high, it's not the highest, it's the second highest. I'm going to put that number right at 448. Okay? Now I'm going to put it right at 448. So this is saying if we go to 448 or higher, sell the position. Now, if it goes higher than that, if it gaps to the upside, could it get filled at a higher price? It could, but it can't sell any lower than 448. Okay? Now, number two, if we fell down lower than 370, and I'm going to take that horizontal support less, let's say, example given 2%. So we're taking 370, the horizontal support, less 2%. It's going to give us a price point of 362.60. So that is a trigger to sell it at that price or lower. 362.60. Now, are your numbers similar, or am I just off in my own world here? Okay. Now, what you're now going to notice is we got a target price, we got a stop price. Notice the whole order is done right on the chart. And now what I'm going to do is going to go confirm and send. Okay. And we now see that this isn't a paper money account. This is a simulation. It's not a real trade. We're going to practice together. Okay. You're going to notice we don't have a commission because it's a U.S. listed equity, and we're going to send the order. And that order is sitting right there. We can see it on the chart, okay? You can see where that order is. Put our cursor right on it. Trying to get it at 403.96. We can see where the target is right there. We can see where the stop is, and we can adjust, move up and down the orders right on the chart, okay? Get used to that. Now, any questions on that, okay? Now, the reason why I brought this up is because many of you asked me about it. You said, hey, James, how is Micron trading at such a low PE multiple? So when we talk about PE, we're typically talking about historical earnings, okay? If we say language like forward PE, we're looking at the estimate of the earnings over the next year, okay? Hence the forward PE. And the third term there is PEG ratio. PEG ratio looking at the current PE over the growth estimate of earnings over the next year. Now, I want to come to its twin cousin just real quick, okay? Now, if we went to, let's say, Market Watch, and if I went back to visualize for just a moment, okay? Now, if I click on, let's say, that technology area, just one more time, one of the other stocks in there that we saw here today was ADI, okay? For just a moment, let's compare and contrast. Now, by the way, before we go there, I want to kind of show something that is really interesting, okay? If I chose a company example given like Walmart, okay? Let me just kind of show you compare and contrast, okay? So if I brought up a company like Walmart, we're talking about something consumer staple. Consumer staple meaning these are things that you necessarily need. Now, is everything in that store something you need? Of course not, okay? But mostly. Now, what I'm going to do is I'm going to scroll down a little bit, and I want to kind of take a look at something for just a moment, okay? So when we look at the earnings of Walmart, it just didn't have that stair step of earnings per share that was going up. It's a little bit more flat. Now, you're going to notice that sometimes when you actually have things that are they're not growth, you can also have kind of some seasonal components to that, meaning some quarters, Christmas and so on, that might be the biggest quarter of the year, okay? It's not stair step. Think back to actually what we saw on actually Micron. Now you're also going to kind of see that we don't see that stair step. We don't see the beats of actual compared to what the forecast was. And what is so crazy about this is when you look at the PE of actually Walmart, it's at 44. When you look at the forward PE, which should be lower if the forward earnings is actually higher, it's at 42. 42. Okay, and you look at the PEG ratio, it's at 4.9. Now, this is what's kind of interesting. So, which one has more risk? Now, the con is if you buy a company like Walmart, it would take 44 years at the current earnings to get to the current price. The higher the numbers, the more the risk. So sometimes people say, something like Walmart consumer staples less risky. Well, if we look at the Walmart, the price of that over the current earnings, that's not necessarily true, okay? There might be more risk in stocks like, let's say, Walmart, because Walmart is really currently priced pretty high relative to the earnings, historical, and forward, and growth, okay? So now, that's where it is now. If we go back to, let's say, a stock, let's take that second one for just a second, ADI. Now, when we look at the ADI, we're talking about analog devices. What type of stock is it? Semiconductors. Where did you get the stock from? It was right on the visual watch list. Now, if I take example given, let me just kind of clear that for just a moment, okay? We're going to scroll down a little bit. The best way to kind of see that growth is let's look at the differences. So first off, if we're also talking about a growth stock, you're probably not going to get a dividend yield probably greater than 2%, okay? That is another telltale sign that you're probably tipping into growth. You only have an annual dividend yield of 1.34, okay? Now, if we go down to earnings, you're not going to see the earnings as high as it was on Micron. Noted. That's the upcoming earnings. Now, if we also take a look at the numbers where you see the growth historically, that's that stair step again. Okay, now let's take a look at this. When we look at, let's say, the price to earnings, this is trailing, meaning the earnings has already happened. Well, it's priced at 56. But where some investors are not investing just for what happened in the past, they're investing for the future, right? Well, that forward PE is at 28. Now, we know that in the last recent couple weeks, some of these tech names have been absolutely taken behind the woodshed and received some splinters, okay? So do investors invest in the PE or the forward PE? The answer is both. What are they probably looking at more? Probably forward PE. Why? Because they're looking at from now going forward. If they can reach those forward estimates as far as what they think they can do, a PE of 28. If we're talking about growth, you're probably going to look at something that's at least 25 on 4PE. Now, when we look at something that has some growth component to it, if we could find a growth name that had a price to earnings peg of, let's say, 1 to 2, that's actually pretty attractive for some value growth investors. Now, if you said, James, I want to kind of see the comparison, okay, of the company compared to its peers. Oh, this is where it gets so interesting. Okay, now, a couple tabs that I want to make sure you're aware of. This tab we're looking at is overview, okay? And it's giving us some information like PE, the dividend yield, the growth forecast. Guys and gals, I'm going to say this nicely. Let's all wake up, okay? If we think we're just buying companies because of the ticker symbol, that's what an amateur does, okay? So really, when we're talking about investors, they want to know, look, what are the forecasts? I'm going to tell you right now, people don't typically look at this. They should, okay? Now, what companies are maybe growing at a growth forecast of 3 to 5 years? It doesn't mean they're actually going to do it. It's a forecast. Now, the one thing I want to kind of show you is one of the other stocks that is kind of showing some pretty strong forecast of growth is really MRVL. Probably doesn't get enough attention. Now, when we look at the net profit margin, which this is looking at, now if you say, I don't even know what that is, you could actually, it's going to tell you what that is, okay? So there it is right there. Now, The one that is also pretty high is still Marvel. Okay. Clack is also there. You're going to see that the one we're looking at is 24. Now, anything that's double digit is probably still pretty strong. Now, if you said, I want to show more, please click on that. Now, what that's going to do is it's going to show you valuation, fundamentals, and dividends all on one sheet. If you just want to get a quick overview of valuation, such as price multiples and so on, well, you could see that right there by just clicking on that. It's going to get that valuation tab will show you price multiples. Fundamentals. That's when you're going to look at things like net profit margin, sales per share, and so on, earnings per share growth forecast. If you're a dividend person, there you go. Payout, dividend coverage ratio, profitability. We're talking about income statement now, okay? And when you look at consensus, what do the analysts actually say in terms of whether it's buys or sells, okay? Now, if we went back to overview, if you said show more, you could then see all that just all in a table. So if I scroll down now, instead of just looking at piece by piece, summary, fundamentals, valuation, viewpoint, right? Other ratings and so on, growth, it's now just all on one sheet. How do we get there? Well, we just clicked on show more, okay? So make sure you're aware of that, okay? This is what's nice is when you find a company, you're probably going to find another one. And another one that might be maybe a little interest to take a look at is MRVL. Now let's go back to ADI for just a moment. Let's look at the chart together, okay? So when we look at ADI, you're seeing on this chart, this is one that kind of had a little pullback in the price. And you're going to kind of see that it was sideways for a while, okay? Now, one of the things we've talked about probably about in the last week to 10 days is the MACD. How many of you remember us talking about the MACD and divergences? So whenever we actually see the MACD the price actually go down, we could actually look down and let's say, well, let's kind of look at the MACD. The MACD is the momentum of the selling pressure, right? We're looking at, let's say, when the MACD was actually there at its lowest point, and that was actually there. And if we look at the lowest point again, I'll put another X. That's where the MACD was at its second lowest point. But you're going to notice that the MACD it wasn't lower. So ADI in the chart starts to show some signs of diverging, okay? Meaning price at a low, but maybe the MACD, the histogram, not. This is another low on the price. What do you notice on the MACD? Showing a different story here. The MACD is not at a low. What do you notice at another low? What do we notice? The MACD is not at a low. It's at the zero line, okay? What do you notice about the MACD? Well, we're holding above the zero line. Now, so that's kind of another idea that the momentum of the stock, bullishly, is building. Now, the other part about this is if we're seeing the histogram on top where those bars are getting taller and taller and taller, like a volcano, it's starting to explode higher. Now, if that's the case, the chances that we break up through the resistance area becomes higher and higher. Now, I'm going to tell you what happens, okay? What happens is the investor says, geez, my gosh, I wish it would have gotten in. But I talked to two friends of mine and they were talking about how bad it is and blah, 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 blah. And the fact is they say they're technicians, but the truth is they're overcome with emotion, okay? Now, if we take a look at this, we go back to the chart. And if we look at this, let's say the investor says, hey, I want to go ahead and try to buy those shares of stock thinking that the price might try to continue to the upside. Now, what I'm going to do in this case is I'm going to buy custom with OCO bracket. Do not think for a single moment that the investor has to buy the whole position. The word that we've used most often was dollar cost averaging. So if we said, hey, this is a little high, we could use a buy limit order to try to buy at a little lower point. Second, we might not take a full position, okay? Now, what I'm going to do in this case is I'm going to go buy custom with OCO bracket. Now, let's say that we normally allocate $4,000 worth of capital to get into a position. But let's say I'm not comfortable with that. Let's say I'm only want to do maybe $2,000 worth of capital. That's it. Half a position. Well, half of a position or $2,000 would be about 5 shares of stock. Okay. Now it doesn't sound like a lot in terms of shares of stock, but you got to remember something is that this is not moving a dollar or two a day. This stock is moving, $10 a day. Okay. So it's not the number of shares, it's the price per share movement. Now, what I'm going to do is I'm going to set a target right up at 361. Now, I'm not saying that that's it. You're going to notice on the chart, we have a prior high. We have a pullback where we made a base. We're now rallying back up to the prior high or trying to. It kind of looks like we're trying to form what type of price pattern? The answer might be a cup. Okay. Now, when you get a cup, could you get it maybe a handle? Yeah, that's the flag. So I'm going to put a little marker initially at, let's say, 363. Now, James, if I wanted to set a little tighter stop, could I maybe use today's intraday low as a place to set a stop underneath? Intraday? Yeah, let's show that. Some people might be thinking of that. I'm going to take 341-ish, less 2%. And now what I'm going to do in this case is 334. Okay. Now, if I take 334, okay, that's using the intraday low, setting a stop less 2%. There it is. Remember, is it buying a full position? No, it's only buying half. If we can get like another little dip in the price a little bit, could the investor try to look to add as it's a little bit closer to support, trying to make a higher low? That's the idea we've been talking about. Okay. Now, speaking of that, how could I see other classes that you've done where you've talked about that? Well, let's show that, okay? So second trade that we're going to do here is confirm and send, okay? So what I want you to do is a couple stocks that we want to also keep an eye on. Let me send that order. Remember how the stop works. If it goes to that price or less, it's going to trigger it to sell. A couple other stocks that we're going to keep an eye on in terms of growth that we kind of made mention of. We made mention of cruise lines, okay? Keep an eye on that. If those oil prices actually come down, could that also help those ships to get a little push? Keep an eye on RCL, NCLH, etc. Now probably the strongest name in there is really currently Carnival. The other stocks, keep an eye on Delta still. Keep an eye on United Airlines. Keep an eye on, let's say, Love. Can you get a reversal on that? And probably the other ones we're going to keep an eye on is really stocks like Marriott and also with that Hilton as well. Those have been themes we've been talking about. Now, where could you see other classes that have been taught? So one thing you want to make sure is if you go right to schwab.com, go to learn, and you're going to now go to see where it says Schwab Coaching. Very important you watch this, okay? There's some resources that you have available to you that you might have not realized. So if you went to, let's say, learn, and you click on that and you go right to Schwab Coaching, you're now going to see some tabs. Live webcasts and virtual workshops, on-demand webcasts recorded, in-person events, okay? And also meet the coaches. Now, if I click on live webcasts and virtual workshops, this is where you could see a calendar of material that has been taught or is going to be taught. Now, I'm going to click on this in terms of on the month, okay? And this is really going to show us a calendar, okay? So first off, what's the date? April 8th. So here we are. We did growth stocks, okay? The next class we're actually doing is on managing an option portfolio, okay? That's coming up next. You're going to see the next one is trading price patterns. And you're going to see that also throughout the day we have other classes such as getting started with Thinkorswim, okay? Stock investing for beginners and so on. These classes, let me send this out to you. Bookmark this for sure, okay? That way you could actually have what classes are being taught, who's teaching them, and also what level of learning is it, okay? So that way everyone who wants to learn could be fed the material that they actually want to learn about. So is that helpful for you, okay? Now I'm out of my time here today. These are 45-minute classes. The next class coming up next is really managing an option portfolio. Always remember that you can find us right on YouTube, our channel, Trader Talk Schwab Coaching Webcast. Do not forget to subscribe. It's free, okay? And also remember that I teach classes each day, and Connie teaches 2 classes as well, so join her as she teaches. You can find her schedule right there on the calendar. Now remember that with what we discussed here today, looking at some growth stocks in terms of PE, forward P, PEG ratio, kind of found some examples that are interesting when you compare and contrast them to some other stocks like Walmart that really actually have higher Ps. And so we're in an interesting market in terms of tech stocks, maybe trying to get a rebound. Keep an eye on that. Remember with what we discussed, it was done for example, illustrative purposes only. And remember that with what we talked about, today's class was live and recorded. Thanks so much for attending. Thanks to Connie and thanks to all of you. Stay tuned for Brent Morse coming up next. Take care. Bye-bye.